Hello. This episode will discuss the preparation of the Schedule of Cost of Goods Manufactured statement. This statement is an internal document summarizing the types and amounts of cost incurred in a company's manufacturing process. Recall that all of a company's manufacturing costs are accumulated in the Goods in Process Inventory account. This account may start with the beginning balance. All of the costs of production incurred during the year are added to it. Those costs include direct material costs, direct labor costs, and indirect overhead costs. As inventory is completed, the cost associated with completed inventory is taken out of goods in process with a credit, leaving it with an ending balance on the debit side. Seeing it in equation form here, direct materials plus direct labor plus factory overhead equals the total manufacturing cost incurred during the period. Those manufacturing costs are added to the beginning balance in goods in process. If we subtract out the ending balance, the difference will be the cost of goods manufactured. Looking at it in the manufacturing statement format, we can see the three costs of production, direct materials, direct labor, and indirect overhead costs, giving us the total manufacturing costs for the period. If we add those manufacturing costs to the beginning goods in process inventory account, gives us total goods in process. If we subtract out the ending goods in process inventory balance, the result will be the cost of goods manufactured. Looking at the detail of materials, we can show the flow of costs through the raw materials account. The beginning raw materials inventory balance is combined with purchases of materials to get the total dollar amount of materials available for use. If we subtract out the ending balance in raw materials, the difference is going to be the cost of direct materials that were used in production. This flow of cost through raw materials is normally displayed out and shown in full on the Schedule of Cost of Goods Manufactured. For purposes of brevity, it is summarized here in this schedule. After we list the cost of materials that were used in production and added to goods in process during the year, the next cost will be the amount of direct labor. This schedule will report all direct labor costs that were incurred during the current period. Finally, the last of the manufacturing costs are total factory overhead indirect costs. The schedule will list out all of the costs incurred of indirect production costs, totaling the amount that is reported as total factory overhead. Again, this is normally listed out in the schedule, but for purposes of brevity, it is not shown in full on this schedule. Once we show the flow of costs through materials to get the materials used in production, the amount of direct labor costs incurred, and all of the factory indirect costs incurred, added together, they give us the total manufacturing costs for the period. Again, those are combined with the beginning inventory balance in goods in process to get the total cost of goods in process, subtract out the ending goods in process balance, leaving us with the cost of goods manufactured. Seeing this next 2AT account of goods in process, we are seeing the correlation between the beginning balance, cost added, the ending balance, and the resulting cost of goods manufactured. The ending goods in process inventory, remember, contains the cost of unfinished goods and is reported in the current assets section of the balance sheet.